Hey, good evening, everyone. It is a Tuesday after the market is closed. It is September 16th, and it was a decent day on Wall Street within a very good year in overall stock appreciation, considering we had a huge sell off back in March, April. The S&P 500 is up 12.33%, and the NASDAQ is up 15%. So those really high flying stocks are making a big difference for the NASDAQ. The Dow and the Russell are also in positive territory. So I hope if you're watching, your stocks are doing really, really well. Mine are certainly doing really well, and I'm really glad. I'm having the best year of my investing career, and I'm able to share it with the community of investors that have watched my channel for a while, and many of them became members. I encourage you to become a member. There's lots of information that is shared within the community, and all the research you're going to see on this live stream, I share it. I have a repository of evaluations that I share with members. I also have calls, and of course, on live streams, if you're a member, you get to nominate tickers to take a look at. So consider being a member. I think it's really worth it. In fact, I have a big member already signing in. Big House Juice. Hello, sir. Thank you for joining. I hope you're having a good day. Hope you had a good day on Wall Street. Man, I really appreciate that comment, Big House Juice. It really fuels my enthusiasm when I get, feedback from people that feel like they're learning something from this channel. That's why I created it. Frankly, I'm 57 years old, and I've been learning, since, about investing since I was about 20 years old. And I learned by asking others to just teach me what they know. I asked real estate investors. They were gracious enough to teach me a lot, stock investors and so forth. Now it's my turn to maybe pass along some of that information that I've read in books that Warren Buffett, Pat Dorsey, Peter Lynch, these guys have written books, Benjamin Graham. And it's my turn to kind of give away the knowledge, and hopefully it's very useful. It really means a lot when people find that the information is useful for them and they become better investors. That's what it's all about. It's everybody getting better and better. Because if you think about it, if you just apply yourself and you just keep committing to learning how to be a good investor, you're going to make more and more money over time. You're just going to be in control of your economic destiny. And I know that just about everybody wants that. Everybody wants to have the ability to have the home they want to buy in the area they want to live in, the cars they want to drive, the retirement they want to have, send their kids to the universities that the kids want to go to, have, all those things that you would like to have. That's where investing can really get you. So Big House, thanks for tuning in. And I appreciate all the comments that you're providing. And thank you so much, sir. So I had a couple stocks in mind to take a look at, but I'd love to hear from you on the stocks you'd like to take a look at. If you're a member, pop them in the chat. We'll take a look at them. If you're not a member, no big deal. $5 super chat, and I can take a look at the stock of your choice, or become a member on the fly. It's pretty easy to do so. The stocks that I wanted to take a look at, just jumping right in, are going to be Wix, MercadoLibre, Oscar Health, and UnitedHealth. Now, this could be interrupted at any minute by somebody requesting a stock. So just keep that in mind. It looks like Kurt, good to see you. Thanks for tuning in to the member call, by the way. It was good to hear your voice. Good to have you join in. If you have just celebrated a birthday, Victor, hey, thank you. It's been a few weeks. It was actually back in August, but I appreciate it because I did flip from saying, hey, I'm 56 years old to I'm 57. So you have a sharp ear, sir. You heard that correct. A couple weeks ago, I celebrated birthday number 57. Thank you. So I'm going to get into a couple stocks, starting with Wix. Wix, I feel, is a stock that I owe the community for, because this was brought up by somebody from the community, brought it up on a live stream or a member call. We looked at it. I really liked it. As a matter of fact, I do remember who it was. It was a person in Europe, and he wanted to take a look at it. And I most definitely looked at it. The things I liked, it's a software company. They do website software, easy to use website software for typically business owners. This could be a dentist that wants to have a nice little website where people can schedule appointments. It could be an attorney. It could be, just think of those types of small businesses. And these guys do a really nice job of making it easy for that entrepreneur to create a quick website. We looked at this company and it had a terrific valuation. And we looked at it roughly a month ago. And I really liked what I saw. So I started buying into the stock. And I want to thank that member for bringing it up, because 43% appreciation in that time is excellent. And that's the kind of stuff that we could reveal together if you have a lot of eyes and ears and analysis around the world, looking at companies that look interesting, maybe that are discounted, aren't being taken for a ride with the rest of Wall Street. There could be an opportunity like Wix. And Wix continues to go up nicely over the 1 year. You see that this stock was up substantially in the past, up at $246 a share, but it sold off. And what's interesting is the market sold it off quite drastically while the company was growing revenues. And the growth of revenues means that customers like the software. More customers are buying the software. This company has purchasing power. They could raise their fees a little bit, and the customers stick around because they like the software. So for the stock to be going down in price while revenue is increasing, in fact, accelerating a tiny bit, that is opportunity, because somebody's wrong. Either the Wall Street's wrong, that the pricing should be a little higher because these guys are performing better, or maybe the price was incorrect to begin with and it's correcting itself. But when we looked at it, it really was priced at a very good discount. When we look at free cash flows, which is the principal way that I think we could get to the intrinsic value of a business, the inherent value of what that business means from a dollars and cents perspective, that's free cash flow. These guys have been growing their free cash flow. Another very good sign that their fundamentals are really good. So we saw a declining stock price with better fundamentals, improving fundamentals. It's like the core business keeps getting stronger, better. Customers like it even more, but the stock price is dropping. So that's where the opportunity starts. Gross margins are good. Profit margins are a little light, but they can improve that over time. The free cash flow margin is excellent. So when I valued this stock, it valued it with a really nice discount. When we look at the forecast, 19 analysts cover Wix. And in consensus, they also agree the stock's discounted. So we have a group of analysts that agreed with us a month ago that, hey, Wix is a good opportunity. It's going to keep growing over time. In 2026, it's going to grow by 13%, then another 13%, then another 12.5%. They're going to be a $3 billion revenue company in 3 years. So this one here is, I think, a really good reflection on the community. Somebody brought it up. He did some homework. I appreciate that. And we analyzed it, kicked it around, and I'm not shy about, saying which stocks I'm buying and which stocks I'm selling and which stocks I like and dislike. This one here, I said, hey, I really like it. And I slept on it and I started buying into it. And I shared that information too. So this one here, thank you so much, community. This has been a fun one, a good sign that we're on the right track. We're finding the right stocks and sharing that knowledge with one another. So Wix is the first stock I'm going to cover. I've got comments coming in. Now that I'm done with Wix, let me take a look here. Peyton, great to see you. You would like to revisit Futu. I'd love to. And they have gotten beaten up. I would love to talk about Futu because I've been buying the stock. And I'm going to get that ready. And then I'm going to check the comments just to make sure I don't have people waiting too long. We're going to come back to Futu. All right. So let's get into Futu. Futu Holdings reminds me, in a way, like Interactive Brokers or Robinhood, but they are in Asia. They're headquartered in Hong Kong. Their primary business is serving people in China, Korea, Japan, and that area, that region of the world. And guess what? Those folks, they save their money and they want to invest in stocks too. We're not the only ones that want to buy Nvidia and Google and Meta and all these great companies. We've got people in Asia that are like, hey, I'd like to buy that and buy some Alibaba. And they can use Futu as the platform. Here in the United States, you may be familiar with Moomoo. That's their company. In Asia, they go under a different brand. Now, and they go under Futu Bull. And that's what they are known by over in China and Asia. Now, I really like the Robinhood stock. It's been the number one percentage performer in my portfolio for the last 2 years. It's just been on a rocket ship ride upward and onward. So if I could replicate that in another region of the world, I'm on board. And look at this, year to date, 120%. I think we're on to something here. So I've been buying into Futu. Now, more recently, over the last month, the stock got up to 194.74. It's down to 175. So we've had a little bit of pullback. So I first want to address, is something changing in the marketplace? Is there a big kind of factor that is going to weigh on Futu? Is it going to hurt it? Is there something we should be concerned about? And let's take a look at the news stories. And then I have a few pieces of information to share as well. So I don't see anything recent on stock analysis, but you know where I usually get a little bit better information is on Google. And Google tends to have the most current stories. Zacks has them potentially in an article. Okay. I don't see anything big there. Okay. All right. So I'm not getting any news stories that would be driving maybe investor sentiment, maybe getting some fear introduced into this stock. So I'm not seeing that. What I have seen over the last month is I have seen stories where in China, the rate of savings is really high. And the expectation for those savers in China to invest in stocks is really high as well. That just helps Futu continue to grow. More account holders bringing in their capital to invest it and buy stocks on Futu, buy crypto, and maybe some ETFs. All those behaviors will drive more revenue growth for Futu. So I have heard that story, which is a positive one for Futu. So big picture, I like what I'm seeing. Second big story. The expectation is that the US and China are putting the finishing touches on a trade deal. That's pretty much been communicated by the White House. I expect toward the end of the week, they're going to reveal everything maybe on Friday. Well, if we remove a big cloud over the China, Asia to US, commerce, I think we're going to get rid of one of those negative stories and Chinese stocks are going to rally. It's going to help the Futu stock directly as a Chinese stock, but it's also going to help all the stocks that these guys also buy, like Alibaba, Tencent, Baidu, all these really, really good stocks are going to flourish. In fact, even before that, when we look at some Chinese stocks, let's take a look at some Chinese stocks. And I'll show you that they've been going up in value. And when Chinese stocks are going up in value, this is just today. Baba's up, NetEase, JD. Look at Baidu's up 7.8%. Some are down, but a lot of these are up. And if you look at, I wish I had like the monthly change. Chinese stocks are doing really, really well. Well, just putting 2 and 2 together, kind of lining up what I think is likely happening in China is people in China are seeing that, hey, my neighbor bought into Alibaba and my neighbor is up 91% on his money over the 1 year. I want to do that. I want an account with Futu and I want to start investing in stocks. I want to start participating as an investor. I want to start learning. There we go. And that's where Futu wins. So I think that the situation, the environment for Futu is looking really good. So, hey, you want to discount the stock? I'll buy it. I bought shares today. I bought shares yesterday. I bought shares every time the stock has traded down because this stock to me is a very good risk reward situation. When I value this stock, I still see a very compelling discount. I just explained the big story around Futu, which I think supports it. And I'm having a little trouble with my Google lookups. There we go. Here, well, maybe it's going to work. It's kind of giving me a not available message. Let's see if I'm going to get it this time. It looks like Google's going to work for me this time. I still have Futu using a 10% discount rate, which is higher by 200 basis points more than if this company was headquartered in the good old USA, it'd have an 8% discount rate. But since I'm investing outside my home country, I want a higher rate of return. When I use that as a discount rate and I look at their cash flows and I look at their earnings per share, I still have a 27% discount to work with. Having said that, on days when it sells off, I'm compelled to buy more Futu. And that's what I've been doing. So I gave you a complete answer to your question, Peyton, but I'd love to get more questions from you. It's a stock that I feel good about. I think it's been working for me. It's been making good money for me. And so has Robinhood. In fact, I'm on to trying to find other stocks in the same industry. I've talked about eToro that I'm just beginning a small position in and seeing when that one's going to be ready for prime time. I'm not an investor in, but if you look at like Interactive Brokers or Charles Schwab, those have been really good stocks as well. So this is a pretty fertile place to look for value, which is in these brokerages. Stocks continue to go up. I started by showing how the S&P has just had a tremendous year, considering that we had a very strong correction at the beginning of the year where the S&P went down 19%. But the retail investors said, that's fine. Thank you for the discount. The retail investor, not these supposedly really smart institutional investors, the retail investor, you and me led the rally, and we're the ones that said, this is an opportunity. And we took that opportunity up. Back to Futu, when you have this kind of behavior in the market, it's pretty darn fun. It's rewarding. It's profitable. More people will open up accounts with Robinhood, Futu, Interactive Brokers, Charles Schwab, eToro. So around the world, I mean, the news continues to carry is, people are seeing that, hey, being part of the investor population that is learning and becoming a better investor, that is something that more and more people want to do. So hopefully that helps, sir. And I agree that the market has not moved Futu. And it's been interesting. Let's study something real quick. So we're going to look at Futu and we're going to look at Alibaba, which is the biggest market cap in China. You're going to see that these charts are not moving together. Look at that. Just for the 1 day, they're going in opposite directions. Futu's going down while Alibaba's going up. Over the 5 day, it's very clear. We're 20 full percentage points apart. And even over the 1 month, Alibaba's going up. Year to date, okay, well, at that point, you could see that Futu's actually been a big reward system for investors. It's up 119 versus Alibaba. Now, these near-term sell-offs in a stock, they're very good for a couple reasons. One, it catches our attention and we reanalyze these businesses. Did I miss something? Is there some new information that I need to take into account? Is there a negative story out there that's real? Like just making stuff up. Let's say one of these companies we own was compromised and all the data was stolen. Now it's a pretty big event. That could drive a stock down. It could be a big liability. That hasn't happened, but just saying an example. But nothing like that I've observed has happened in Futu. But the market has proven to us over and over again that it will be irrational. It might be irrational for a week, a month, a year. It'll be irrational for a while. And we don't have to treat it as a problem. I prefer to treat it as an opportunity. And I'll give you an example that is right in front of us, played out beautifully, is Google. Over the 1 year, the market has gotten scared and said, boy, this Google Alphabet business, I'm not too sure about it. From February through April 8th, it started before everything else started selling off. The market decided, you know what? We're not too sure about this Google Alphabet business. We think that they're overly risky due to the Department of Justice. We think AI is going to hurt them and all that good stuff. Now, I've been impressed with Google Alphabet really since they started search 27 years ago. And I actually thought the market was a little out of its mind. Why would you guys doubt Google Alphabet? I mean, doubt some other business that maybe isn't as good. And then Google for a while just didn't really move a whole lot, right? It took its time kind of going up. But guess what, everybody? Google's moving. And it's not going to stop. In, what is this, about 3 months, less than 3 months, it's up 51%. And there was a news story today that the number one downloaded app on Apple, the Apple App Store for AI, used to be OpenAI. Number one is Google Gemini now. Whoa, wait a second. What's going on? Which means our friends at Alphabet have a legitimate AI business on top of the search business, the YouTube business, the robo-taxi business, the giant cloud infrastructure business. So these guys are loaded. Back to my point, the market will be irrational right in front of our own eyes. And we need to do the research. We need to make judgment calls. We need to think about the situation and see if it's warranted. Hey, that stock should be trading down. Revenues are going down. The business is suffering. Their fundamentals are bad. Well, that would make sense. Stock's going down. But when it's not warranted, it actually creates an opportunity to buy a stock and very quickly make lots of money on that capital. So this is going to happen over and over again in the stock market. If you're like me, you're a forensic stock investor. You're looking for the evidence that proves that, hey, the market is temporarily irrational. It's temporarily mispricing a stock. And I want to find those stocks and I want to buy them when the time's good and then watch them appreciate over time. Sometimes it takes a year. Sometimes it takes longer. But if we are good at our analysis and are able to get a good lot of stocks that are going to do this over time, we're going to do fantastic. We're going to do great. So back to Futu. I believe that the short-term sell-offs in Futu are just the market doing its thing, being a stock market, selling off a stock when everything else looks good. If the US and China make a deal by the end of the week, it's only good news for Futu. So thank you, stock market. I appreciate the discount on Futu. I'll continue to buy shares there. So that's how I address Futu, Peyton. And let's keep analyzing stocks, man. This is you make money by buying stocks at the right time. And we are aware of how stocks are being priced and what their valuations are, we'll be able to point to ones that look like opportunities. And it looks like Futu and Baba are some of your biggest positions. Well, I don't think Baba's giving you any problems, right? That one's been a terrific stock. Man, Alibaba, when they revealed that they had their cloud infrastructure business growing at 26% and that they can't keep up with demand, it makes total sense. These guys are going to be the hyperscaler to Chinese companies as well as Asian companies. So that was a great, great story for Alibaba. Looks like Mike, the dividend investor guy. Great to see you. Thank you for checking in, sir. And I guess we agree on Alibaba. Keep it going, Alibaba. You're not done yet. You got to get to $300 a share. Then we could all toast to Charlie Munger. $300 a share. You were right, Charlie Munger. You were absolutely right. All right. So now we are flying. We got deep into Futu. What else you guys want to look at? This is your stream, not mine. I'll talk about stocks, but I'd prefer to talk about stocks you want to talk about. Let's see here. Herdo, how are you, sir? Good to see you. I don't see any other requests. And I'm going to keep moving on to the next one. This one, another one of my choices. But again, I will gladly be interrupted at any time with a request. Let me know. MercadoLibre. Now, this stock has not been flying up. Neither has Amazon. But this one's going to be my focus today. It was up nicely, but over the 1 month, it's flat. Year to date, looks okay. But look at this. From May 15th to now, this capital has kind of been sitting idle. Now, that's not a big amount of time, but it has caught my attention. I'm scratching my head asking myself, what's going on here? So let's take a look at the fundamentals and kind of think through this stock and see, is the market beginning to communicate some real problems with their fundamentals, or is it just kind of taking a pause before it continues to rise? Over the 1 year, this stock hasn't done all that great. 5 year, it's done okay. And I like the trajectory that we've seen from 22 up to this level. It looks good. So if you don't know, MercadoLibre is in essence an e-commerce company. They're down in Latin America. Market cap of $121 billion, revenue $24 billion. Has a little bit of a high PE. They are growing nicely, but you could buy Amazon for a lower PE. You can buy Alibaba for a lower PE. So this one does have a little bit of a high PE. Analysts think it's discounted. Now we're seeing that, the stock isn't moving a whole lot over the 1 month. And I think over, the last 4 months hasn't really moved. It actually would be negative if I measured from the high point achieved on May 15th. Now, the fundamentals do look good. We're looking at revenues in US dollars, 24 billion in e-commerce revenue. And they also do payment processing. They do financial services. They do a variety of things. It's not just e-commerce, similar to Amazon. Amazon does a variety of things now, but their biggest business is e-commerce. This is a good looking growth rate. Amazon's growing at like 13%, if I'm not mistaken, but they're gigantic, 670 billion in revenue. And Alibaba isn't growing 35%. They're growing less than that. So that's a good looking growth rate. The quarterly looks good, looks fine, 33.85. So this growth rate looks fine. The growth actually looks fairly good. If they keep this 36% growth rate, or better yet, if they start to grow a little faster, that's going to be a reason for me to buy more shares. Right now, I own MercadoLibre. The other pieces or fundamentals, the cash flows keep growing. That looks terrific. Margins, it's e-commerce. The margin did dip a little bit in the trailing 12 months. And free cash flow looks good. So this one here is pretty much kind of in a lull. And if they could really come up with a good earnings report, I think it'll kick them out of that lull and start to trade higher. Or the flip side, if they have a bad earnings, maybe they could start selling off harsher. These guys, they have 19 analysts covering the stock. The analysts think they're discounted by about 17%. Pretty nice little discount. And it's expected that these guys are going to continue to grow. They're going to end up being $50 billion in revenue. That's a pretty good sized business. And their earnings per share is going to fly up. Look at the growth rate on their earnings, their profits. Next year, they're going to go up, 2026, they're going to go up by 48%. Whoa, you got my attention. 34%, 39%. And their PE, the PE ratio will drop because their profitability is going to go up so fast. So remember my earlier comments that their PE is a little high, but if you look a couple of years down the road, it's going to get pretty darn reasonable really fast if they are able to achieve this forecast. So that looks really good. So that looks good with MercadoLibre. Let me show you my valuation on this stock. Similar to Futu, this stock is out of my home country. And I typed in the wrong ticker. Here we go. So it's out of my home country. So I'm not going to go with an 8% discount rate. I'm going with a 10% discount rate. I want a higher rate of return. And I have a 26% discount on MercadoLibre. That's a good discount. Now, I'd like to understand why the heck is the stock trading flat? When is the next earnings for MercadoLibre? They're going to announce earnings November 5th. So we are about a month and a half from that event. So I'm going to be waiting on this one. I like that the stock rose today. It could get in a nice rally, especially if we see some of the geopolitical stuff kind of begin to be put to rest. You see more and more trade agreements being, made. We get that tension and maybe commerce flows a little freer. MercadoLibre might catch a rally out of that environment. But for now, this is a nice stock to hold. Hey, I'll hold it. No big deal. If I see the stock really begin to sell off, I'm going to reassess, maybe buy some shares. If I see it rally, great. I'm probably going to be holding until November 5th. So that's MercadoLibre. Good stock. All right, so we covered MercadoLibre. Now, those were two positives. Now, let's talk about a couple of stocks that were trading lower. One is Oscar Health, and this one came up earlier. We had a member call this morning. We looked at this stock just briefly, and then throughout the day, I looked at it because I wasn't quite sure. I think yesterday this stock sold off as well. And there was, some things that I saw posted online was that they were going to have a private offering. And I agree, but it's a private offering for debt. They're going to have bonds. They want to use that debt to grow their business. That's a typical thing that you have businesses do. Whether you look at Amazon or you look at Microsoft, they're issuing out debt of this type, so long as they don't issue out too much debt. It was 355 million. So all that was like, okay, they're growing. They need some borrowed funds so they can have liquidity. That's no big deal. So the market has been selling this one off. The 1 month looks okay, but we have this sell off that's been happening. Year to date, this thing, man, talk about a roller coaster. Look at that, going up and down. This is kind of a 33.41% rate of appreciation that every investor that hung on really does deserve every dollar they made. It has been a little bit of a dramatic ride at times. Now, this has been caught up in a lot of negative stories around healthcare. So that's part of some of this volatility. This is a smaller company. It's only 4.6 billion. Revenues look good. And the company, the analysts have gone negative on Oscar. Isn't that interesting? Not too long ago, they loved Oscar. What happened? The analyst and Oscar had a falling out. Somebody's got to send somebody else some flowers and a box of chocolates. So this year, these guys are growing at 34%. And analysts are saying, well, they're going to be negative next year, and then they're going to be positive. Okay, well, if this is the case, I would agree with analysts that, hey, we got to reprice this stock. So let's get over to the Oscar Health investor page. And let's see if we can find the guidance that the management team has for their future. The CEO of Oscar he is a veteran of the industry. He used to run one of the big healthcare insurance companies. And let's see what we've got here. So we've got the issuance of debt. We talked about that. No problem. And they've got, let's take a look at their investor presentation. It was created June 7th. Before I do that, let's see if we have anything that's more recent that gives us guidance. So news and press releases. Let's see if we've got, this is a partnership. All right. So this is on August 6th. So that's about a month and a half ago. And I'm going to look to see where they are communicating guidance. So we could either validate what analysts are seeing and expecting. I'm not seeing that they have guidance here. So expense ratio, some kind of hunting for it. Let's see if I can just get to guidance. So it says that it has it. I don't think they have guidance in there. I think the let's see. So reaffirms updated 2025 guidance. So they reaffirm guidance. So revenues are growing really well. These guys really focus on small businesses, individuals that want health insurance. I'm not seeing anything that gives me concrete kind of what are we expecting from a guidance perspective. So let's go to this presentation and see if maybe, here we go. So maybe that's where we're going to end up in the financial outlook. All right. So this guy, he's a veteran of the health insurance payer business. He came from a company, Cigna. Cigna was acquired by a bigger business, and this guy was probably sitting on his ranch that he bought with all the money he made at Cigna. He got bored and he said, "Hey, I want to be a part of this startup," or he started this business. Then they got all these technology people joining in. So I like the blend of new and experience. So before I move on there, let me check something here. It looks like Matt McCollum. Thank you, sir, for becoming a member. I appreciate it very much. And if you could please email me. This is our newest member. Thank you, sir. I would love to set you up with all the perks. I'm typing in my email address. If you could shoot me an email, I will get you set up, let you know everything that you have access to. Thank you. I hope you get a tremendous amount of value from being a member. And I really appreciate your support. I just typed in my email. Please just email me a quick little email. And thank you very much. All right. So this is what we're seeing here. So these guys are seeing their position for profitability. So they're going to grow their memberships, 37% compounded annual growth rate. That looks really good. Okay. Okay. So this is the market size. And I heard the CEO talk about this. This is the part of the market that the big players, the UnitedHealthcares, the Elevances of the world, they don't like this part of the market because it's harder to manage. It's individuals, smaller businesses. But these guys are taking on a part of the business very fragmented. I think it's a huge opportunity. If they're able to pull this off, they're going to be very diverse, differentiated. They're going to have a huge moat, and I think will be wildly successful. And they're a small cap. Small caps can multiply our money. Small caps can multiply our money times 5, times 10, times 20 if we buy at the right times. So these guys have the ability, if they're very successful, to multiply my money and become a 5-bagger, a 10-bagger in the future, maybe even a 20-bagger. So I'm seeing growth is a part of their mission statement here. And this is in June. They reaffirmed guidance. So these analysts are saying one thing and the company's saying another. So I continue to believe in Oscar. It'd be one thing if Oscar, and I believe that, management teams are in partnership with the investors, the owners. And when I hear these guys talk, I really do sense they're in partnership with us. So for now, Oscar continues to be an opportunity for me. I think the healthcare space is seeing negative story after negative story. It seems like everybody looked at each other that is in the press and maybe the analyst community and said, "Hey, I think it's time for everybody to say something bad about healthcare companies." And they certainly have been there for a while, but things are getting better. UnitedHealth is really in rally mode, and Oscar Health has been all over the place at times, but I think presents a really, really good opportunity for me. The market cap at $4.6 billion. That number, could you imagine if to become a $100 billion market cap company? I would love that. That means they're going to multiply my current investment in Oscar by, 22, 24. It's going to happen over time, like 10 years. But that's what I'm excited about. If these guys continue to operate and really achieve and try to get to that goal they have with these small businesses and individuals that need healthcare insurance, and frankly, everybody needs healthcare insurance. So I'm doubling down on Oscar. I'm good with Oscar. And it looks like I've got some comments to catch up on. Again, thanks again, Matt. Awesome to have you on board, sir. Thank you. Herdo, we are flying. Glad you feel that way. Good seeing you on the member call. Ellie, good to see you. Hey, I appreciate that comment. Thank you so much. I'm glad that you find comments that you see on the live streams interesting and useful. We're going to talk about PayPal. Not my favorite stock to cover because I'm a little frustrated with the stock price around PayPal. But I'm not going to vent on this live stream. I'm going to analyze. Let's do this. So, year to date, no bueno. Translated in English, not good. 21.68% to the negative. Over the 1 year, not good. $64 billion in market cap. This business makes a lot of money, profitable. They just can't grow, and they're not exciting the market. The market's like, yeah, we're going to stamp a 14 PE on you, even though you're in some pretty good strategic businesses. Analysts do think it's discounted. When we look at their growth rate, it's fairly slow growth. Combined in that slow growth is a business that does buy now, pay later. That's exciting. In there is a stablecoin business. And FYI, they didn't start stablecoin businesses like in 2025 when everybody's excited about it. They started it like 3 years ago. They were early on stablecoins. So this business is a little bit of, there's a lot of value there. But maybe PayPal needs to do a better job of communicating that value and trying to figure out how are we going to energize this stock. They also have the Venmo business. The Venmo business is growing really well. It's beginning to be a checkout option on websites. That's really great. I've been using Venmo forever. I use it a couple of times a month to pay peer-to-peer. You know, if I owe a friend some dollars, boom. Somebody does something, you know, a gig at my home, boom. I manage real estate, and some of the, you know, people that fix our rentals, sometimes they want Venmo payments. Boom. It's very easy. The Venmo business is terrific. And that's part of PayPal. So I think that PayPal is like not really appreciated based on merit, but it's the company's fault. I think they got to do a little better of finding a way to grab the investing community's attention. And they could start by growing faster for sure. So maybe they need to acquire a business. Maybe they need to do something because they got to kind of, you know, get their stock price going. And we'll see when it happens. I've been kind of thinking it's going to happen this year for a while because this was like such an expensive stock coming out of COVID. It was over $300 a share. But man, that seems like so long ago. It's been down here for a while. So PayPal is a stock that I'm being careful with. I own it, but it's a little bit of buyer dissatisfaction, investor dissatisfaction. I've been giving the management team benefit of the doubt of, hey, these guys are going to get it right. Hey, these guys are going to get it right. They got to start turning things around, or they got to get a new CEO. They got to start doing something more provocative, something more interesting, or they're just going to be left, you know, behind by the stock market. And other companies are going to grab the investing community's attention. PayPal is a discounted stock. You've heard the term value trap, and this could be a value trap. It's a slow growth company that shows terrific fundamentals. And see, this Google lookups are not my friend today. It's been happening to me all day. And let me see if I can get some solid valuation numbers. Here we go. 53% discount on PayPal. They crank out cash like it's nobody's business. They produce cash flow. They have profits coming out of their ears. So they just got to get some excitement into their business. They got to start growing. They got to take some chances. They got to be provocative. They got to do something, man, because they got to mix in a little show business in how they operate their business to get some attention, because they do have some just really good businesses. They're not being priced accordingly. So at this point, I've been waiting around for a while on PayPal, and I would say that I would say, okay, CEO, it's time. Put up or get out. Put up or move on. You got to get a new CEO with a better imagination and ability to have this stock really go places, because it's a really, really good company. It's had a historic past, but it's been stuck in the mud for 3 years. It's been long enough. So I don't like saying bad things about companies, but I just want to tell you exactly how I see it. And that's how I see it on PayPal. I've been a fan, been an investor, and now I'm being critical. And I think there's some reasons for me to say that. So thanks for asking, Herdo. And look at that. We got somebody from Sydney, Australia. Ellie, thanks so much for joining. And Australia is on a long bucket list of mine. I agree with you, Kurt. Let volatility be your friend. I oftentimes say some people dislike volatility. I like it. I like volatility on stocks that I believe in, because how else am I going to get really good prices? I get great prices with volatility. I agree. Mike. Agreed. I think I want to sit around. I want to stick around for Oscar to grow, and if they end up accomplishing what they want to accomplish, and I continue to track them, I'm going to be a very happy Oscar investor for the next 10 years. So let's keep analyzing the company at every turn and keep sharing that information. All right. Thank you, Mike. And looks like I'm caught up on comments. The final stock that I had on my list is UnitedHealth. And UnitedHealth has been doing well for the 1 month. And this kind of doesn't tell us the whole story. So let me open up Google Finance. And when we look at the stock was, obviously it's just sold off like crazy. Now it's up 42.9% from its low. Over the 1 year, this thing was really sold off. I mean, just bad news after bad news after bad news. It was like, is it ever going to stop? I mean, it can't go past zero, right? And it got down to like $238 a share or something like that. And from there, it really picked itself up, and it's really going places, especially after famous investors revealed that, hey, we're buying into UnitedHealth. We think it's a really good opportunity. That really helped the stock really catch a spark. And it sold off today. And what's interesting is this sold off along with Oscar. I haven't caught up to the news feed, so maybe we can do that together here. So they announced their earnings release. Well, that's no big deal. So United is increasing their premiums. Okay. And they're going to meet with President Trump. Got it. Probably going to talk through what they're trying to do. Yeah. Okay. Nothing big there. And I can tell you that Warren Buffett, he bought shares around $300 a share. So he's in the green. I don't know what the story is about. Yeah. I think these guys are just trying to create this is clickbait. I study Warren Buffett's or Berkshire Hathaway's 13F filings. I think they bought around $300 a share. So I'm not seeing anything there that's making me concerned about UnitedHealth. I think things are still where they were over the last couple of weeks. And I think this stock's really being recognized as a really good opportunity when you think about, even though they had all those negative stories during that time, they continued to grow, and they continue to grow a very, very big business, $422 billion in revenue. When you grow by almost 10%, that's adding $42 billion of top line dollar growth. That's phenomenal. And they drive cash flow. So this business, to me, this presented a really nice opportunity in 2025. One that I don't think it's done. I think UnitedHealth, I think, is going to return to $600 a share. We're at $339. We were at $238 45 days ago. So this thing's on its way long term back to $600 a share. It was at $600 a share previously, $615 a share back in 2024. And I think it's going to return there. This stock has been a very good company for a long time, and the stock rewarded investors for a long time. And now the stock has been, remember that comment I made early in the stream, at times the market is irrational. It just does things that are overplayed, and this is an overplay. Yeah, people were concerned. I think they had reasons to be concerned, but concerned to drive down a great business by 60%, that is a great opportunity. Give me some shares. I switched from Elevance to UnitedHealth when I saw this happen. I'm really glad it did so. I think it's going to keep rising. So UnitedHealth came up, wanted to cover it because it has been a stock like the stock we covered early, Wix, which was what I believe is kind of a successful stock idea that we brought up, and I should say somebody else brought it up. We analyzed it, we looked at it, looked good, up 40% very quickly. UnitedHealth is similar, but it's a big business versus Wix is a small business. And I think this one here is similar in opportunity. We got to look for opportunity. And sometimes opportunity looks, it's wrapped in a very ugly, story, or a very confusing story. And it's our job to be on the fundamentals, analyze the fundamentals, and then make a decision, a qualitative decision. Do I believe the business is going to thrive in the future and the fundamentals are terrific? Or do I think they really are wounded and this business is never going to be the same? In my case, I think UnitedHealth is going to be terrific in the future. I think they're having a very tough 12, 18 months. But I think this will be a really dark period in their business, but they'll return back to $600 a share and maybe keep going as they make their business more and more valuable. All right, man, the comments are coming in fast. I love seeing that. Michael Anthony, good to see you. Chewy reported. Excellent. Any thoughts on Zim? Kurt. So Zim, is one of those stocks that it doesn't trade on its fundamentals, because if it did, it should be trading it should be a $30 to $45 stock because it produces great profits, cash flows, and so forth. But the market will always trade it based on what's going on with the global shipping environment. Are rates going up? Are we going to expect shipping volumes to go up? Is the economy good? And those factors are what weigh on Zim until it's so darn obvious. If you look back to when these guys were making money, like it was incredible. These guys returned in dividends during this time half of your stock price per year. It's like you buy the stock and they give you a rebate. Here's half your money back. And the stock was flourishing up 288%. Are we going to see that again? No, we had a giant supply chain constraint caused by a pandemic that happens every 100 years. That isn't going to happen again. Can you buy this stock and see it go up? I think, the logic is there. Yes. I think if you buy it at the right times, this dividend, and they dividend their profits out, it's a way for an investor that really is focused on income, I think Zim is a good idea. If you can pick the spots and buy it at really low prices, it's a great idea. It's a great idea. I know I'm going to show you a discount on Zim. Their fundamentals are terrific, very profitable, cash flow. They know what they're doing. They're excellent, run company. So all those things, uh, line up. But I just don't think it's going to go from a market cap of 1.75 billion and someday be like $100 billion market cap. I just don't see that. At best, this could maybe double in value over the next 5 years. That'd be if everything worked out nicely. This is just the kind of industry it is. So those are my comments on Zim. I'm not an investor in Zim. It just surprises me way too much. If we look at my valuation, it kind of it doesn't follow long-term appreciation based on fundamentals and has a 71% discount. Why isn't this stock moving? It's not like the economy is like in a terrible place. The economy is okay. It's not thriving. It's not doing great, but it's doing okay. And this business has proven to be a very good company for creating profit, cash flow. It operates incredibly efficient. They really know how to run their business. All those things look great. It's just not going to be priced based on fundamentals. And if I don't have that, I'm kind of just guessing. I hate doing that. So Zim is, it's I think an income investor, if you can get into Zim at the right times, you're probably going to be very happy because, hey, great, I'm collecting high dividends. My cost basis is really low, so I have very low risk on the stock. I totally get that. Thanks for asking about Zim. UNH, it's down a bit because it's ex-dividend date. That could be it. Was it their ex-dividend date came by? Okay, cool. Hey, Lonnie, thanks for tuning in. If you'd like me to look at GLW, $5 super chat or become a member, and I could take a look at that. So Dave. So Dave had a lot of price volatility today. I bought some from my son's portfolio. So here's wow, look at that. It came down pretty fast and then it recovered some. That's good. And Dave has a really, really unique business. I really like what they're doing. And it's still relatively a small cap, 2.89 billion. And if they keep being successful and keep growing at the high rates they're going, they're going to keep going up in market cap. This business is thriving. And look at that. When they IPO'd, it was like, hey, these guys are going to really do great. And then they sold off harshly. But now they've just been cleaning up, or at least investors have been cleaning up. Look at these profits. Holy smokes. It has been kind of, you have to be careful not to buy at the wrong times on this stock. But I think this stock is really, really a good price stock at this time because it's still discounted. I think it's, as Daryl would say, it's consolidating. And eventually its fundamentals are going to drive this stock. When are they going to announce next? That would be interesting to know. When is Dave going to announce their earnings? Their earnings are going to be announced November 11th. So we got to wait about 2 months. So we're going to be waiting for a little while. Yeah, I still see them highly discounted because they're high growth, cash flow, all the things are there. Some of these businesses are just going to launch and just continue to rise. So these are the Palantirs, the Robin Hoods. They just continue to fly up because they have high growth and very good fundamentals. So it looks really good to me. And I'm bought into the stock. I'm watching it a little bit, not buying too many shares all at once. And as we get, maybe we get past middle October, toward the end of October, I might start buying shares then. I'm a little bit cautious between now and the end of October because this tends to be when we have some corrections. So I don't want to be overly aggressive on stocks, especially little ones like Dave. But I did start a good position. I am happy with my rate of return so far. The volatility is pretty high. I feel good about Dave. I got it in my portfolio and I bought it in my 25-year-old son's portfolio. So that's Dave. CRMD. That one there, I'm not in currently. Core Medics. See, this keeps happening. Have to keep hitting refresh on my Google lookups. And this one's nicely discounted. We've got a lot of discounted stocks in healthcare. You've got plenty to pick from. I've got my lot, and I'm waiting for healthcare to, especially high growth healthcare, to really be priced better than it has. I've got a good investment in healthcare. Don't take it the wrong way that I'm staying away from healthcare. I'm invested in healthcare. I'm just, if it starts to really work, I'm going to jump in a little deeper into stocks within healthcare, maybe even pick up some CRMD because it's a really good looking stock, good growth, good cash flow, nicely discounted. The last one, TMDX. Transmedics. Yeah, we've gone over this one. And this one is just the one that was a little concerned about the long-term growth. No, this one's going to keep growing. There's a couple of these that the growth was going to kind of stall and then future growth wasn't going to be looking good. This one looks good. Good long-term growth. That looks really good. One more. Gross margins look fine. Profit looks fine. Yeah, looks good. Healthcare has really good stocks. Thanks for asking there, Mike. And then NVO, it's NVO showing a little bit of positive action. So NVO is going on a run. Their weight loss pill results seem better than Lilly's. I agree. FDA is going after Hims for false advertising. Interesting. Yeah, I think we'll see how things play out with Hims. But NVO has had some sparkles of positivity going from 54 to 57, but it's not great. Over the 1 month, 9%. I mean, that's better than where we've been, right? Down 57, but I own NVO. There's just too much darn value here for me to ignore. And this is a very well-known business. This is not like, oh, this is a tiny business nobody knows about. No, this is a big business and they've been very successful and they own this weight loss franchise that looks phenomenal. So it's just a place where I could, put some capital in. And I think this could be a safe, 15 to 25% return stock over the next 2 years, 3 years. And it also pays a dividend. And I know some people like dividends, but this one here, it's not a big position. I have a lot more money in like UnitedHealth, CVS. This one here, I've got a bigger than a starter position, and I'm going to add more capital once it really starts to work because it has a lot of room to go up. This thing peaked out at $142 a share. I think go back to $100 a share. I think the value supports them being $100 stock. So if it keeps working, I'm going to keep buying. Go NBO. Lonnie, good to have you. If you want me to look at some stocks, $5 super chat or become a member. It'd be great to have you. And then Kurt, revenue forecast. Well, I don't know that you could say that they're going to have a revenue pullback So let me make sure I understand the comment. Zim revenue is forecast to pull back pretty big next couple of years. So I don't know that I agree with that conclusion because shipping, we're going to have to ship stuff around the world for the next 100 years because we make certain things really well. And then we ship them to other regions that need that particular product. That's not going to stop. It's just going to keep going. And Zim is going to be that company that moves a lot of cargo. They move all these containers. That is not going to stop. It's going to continue. But the thing about Zim that makes it really hard for me to figure out is what is my intent with Zim? Is it just to extract, income? Well, I'm not that type of investor. I want to find, the next, Wix. How could I find a company that's just the market has it wrong? I want to double my money. I want to triple my money. I want to have big long-term gains. That's the recipe of success that I want. Now, we all get to invest the way we want to based on the outcomes we want to have. Some investors want income. Awesome. You keep doing you. If you want some dividend stocks, great. Find some quality ones, buy those stocks, own those stocks. They give you nice yield. That's great. For me, I just would rather have really good appreciating stocks. All right. So you added some Dave. I added some Dave. Good stuff. All right, guys. So one thing I wanted to bring up, I'm going to start following. So Polymarket, you guys are probably familiar with this site. They do a lot of prediction information, and you can actually bet on a prediction. Like here's the prediction on what's the Fed going to do. Most people that are putting a few dollars down, I mean, you can bet and say, I want to bet $100 that they're going to go 50 basis points. You're going to get great odds, by the way, because chances are you're going to lose your money because 95% of people are saying 94. We're only going to go 25 basis points. 5% of people are betting 50 basis points, 1.5% no change, and a tiny percent say they're going to increase interest rates. Now, if the Fed increases interest rates, I don't think they would survive that. That would just be an outcome that I cannot imagine. But somebody put that bet out there, and if they're right, they're going to make, pretty good return. So anyway, I'm going to start looking at this because Polymarket has been an interesting place. This is not like traditional economic data. This is information of people that are willing to say, here's my opinion. And I'm putting a few dollars behind it. So there's a little bit of accountability there, which is, I put $100 on this and believe it's going to be a 50 basis point rate cut or 25 and so forth. So that's what on Polymarket, that's what people are thinking. And now quite a number of people have, responded or acted on this. Look at the volume, $166 million. Isn't that interesting? So prediction markets, this thing is pretty big now. You know who's doing this now is Robinhood. They want to tap into this type of interest that people have. And you got the mayor race in New York, StubHub IPO. Where's it going to price? That's coming up. Baseball, you want to bet on the Brewers over the Angels? Boy, if the Angels win, some investors are going to make some good money. So it is pretty neat time. And of course, I've got a 21-year-old son. He's been all over this forever. Like he knows about this. Like, oh yeah, Dad, where you been? I've known about that for a while. So it's kind of new to me, but I think it's very useful. And if anything, it's interesting. We'll see where the rate cut lands this week. It will certainly move the market if we get a 50 basis point cut. I don't think that's going to happen, but we'll see. We'll see what happens. All right. So guys, it's been a nice evening. Thanks for tuning in. I want to do a couple evening sessions because I know some West Coasters, they can't make the morning calls. And This way I can kind of cater to maybe some people on the West Coast, Mountain Standard Time, Central, and even Eastern time zone that are maybe completely shut down their day and are just kind of winding the day down and wanted to talk a little bit about stocks. That's why I wanted to have the stream. We're going to have a stream tomorrow morning. Daryl and I will be talking stocks tomorrow at 9 a.m. Eastern. And you know the format. We look at fundamentals, and then Daryl looks at the charts. I think we've got a good list of stocks for tomorrow. And of course, you can bring your list and ask about those. And then on Thursday, we're going to cover the FedEx earnings, and we're going to cover it a little more completely than before. We're going to do analysis. We're going to listen to the earnings call, and Daryl and I will provide comments on the earnings call, and of course, read your comments on the earnings call. We're going to play the earnings, the management's comments on the stream itself. I thought that might be an interesting way to cover FedEx. FedEx is interesting for two big reasons. One, first, it's an important business, but two, it tells us a lot about the economy. If FedEx is doing well, that means there's a lot of commerce happening, and it's a good barometer on the economy. So it looks like Anthony prefers UPS. Well, we'll compare UPS against FedEx, and then I'll give you that conclusion on Thursday. Tune in. So everybody, thanks for tuning in. Thanks for all your support. Again, thanks for the new member, and please email me so I can get you all set up. And thank you to all the existing members. I really appreciate your support. And have a good night, everybody. Take care.